All right, I think we'll go ahead and get started. Welcome, everyone. Thanks for joining us today for our webinar covering trends and technology shaping the mobile secondary market. My name is Melissa Geringer. I oversee corporate communications for Bstock and will be helping moderate today's discussion. Thank you very much to those of you who submitted questions ahead of time. We'll be covering those after the discussion, so be sure to stick around. And if questions come up during the webinar, please use the Q&A tab on your toolbar to submit them, and we'll do our best to get them answered following the discussion. We're also going to be recording the webinar and we'll plan to email it along with the slides out after the fact. All right, so with that, I'm happy to introduce our two speakers today, Bstock's Vice President of Mobile, Sean Cleland, and IDC's Research Director for Mobile Phones, Anthony Scarsella. Both come with a great deal of knowledge and experience in the industry, and I'm happy to have them share their insights today. Welcome to you both.
Thank you very much.
Great.
Yeah, thank you. Thank you for having me.
Yes, of course. All right, so let's jump right into some of the data and trends surrounding the used device market, which as of now is outpacing the primary. Anthony, I've got some numbers up on the screen here. So a lot of this is IDC research and data. We know that trends in the primary market are directly impacting what's going on in the secondary market. So I'd like to start with your take on things. What's driving all the growth?
Sure. So first of all, we're seeing unprecedented demand for used mobile devices, mostly led by number one, high prices in the new market. We continue to see prices surge, particularly at premium for the premium segment of the market, mostly in developed markets, but as well, we're starting to see even prices grow in emerging markets. And the reason for some of this growth and this demand is the number one, the impact of tariffs, which we'll cover in a little bit, obviously, growing prices in the new market. But we're also seeing heavy demand for first-time buyers that are looking to perhaps step up from a low-end device within emerging markets. So these devices that are being pulled back in by some of these trade-in programs that are being fed to other markets continue to perform well. And more importantly, there's actually at the high end, particularly with iOS, we've seen somewhat of a shortage of inventory. And obviously, when you have a shortage of inventory, you have greater demand, which also increases prices. So I think overall, as the new market still continuing to grow, just at a much lower pace than we previously forecasted, but there is still pockets of growth there. However, only a certain demographic can afford that premium model. So that's where used devices come in to fulfill that kind of need where the premium market is unattainable in certain emerging markets.
Yeah, thank you. And we're going to talk about new versus used shipments in a minute. But Sean, do you have anything to add here to the slide?
Yeah, I think one of the other things that's driving the dollar amount upwards is there's a focus from carriers and OEMs to take up residual value for everything in the secondary market, and price is certainly driving that. But also there's a mix in grading happening. We're seeing more work done to devices. I think that's evident with the Samsung certified renewed inventory. There's a lot more buff and polish and repair happening. So all of the work that's being put into devices is taking the ASP or residual value upwards, which lifts the dollar amount in total. So not only is it an attractive product, but it's becoming a more and more valuable product as well. I also really like the two metrics on this slide about the pre-owned market. I mean, it's a major player now. If it's the number 3 OEM out there, which is incredible. What growth over the last 10 years that it's that prevalent. And then the fact that devices are staying alive longer, customers are still holding on to them longer. We'll talk about that later in this, but they're being used for longer as well. And so that's kind of the newer phones that are coming out may not have a bunch of crazy new bells and whistles every year, but because of that, it's kind of increasing the longevity of that device for many, many, many users.
Yeah, thank you. We will talk about that a little more later. So Anthony, you've got some additional data to share that compares the new versus used phones for shipments and growth. So last year, 1 in 7 phones shipped was used. Do you anticipate this increasing in 2025 and beyond?
Yeah, so we're actually in the midst of our forecast right now, and we're just about to be working on this used data. So I think for 2025, we are seeing a little bit more demand. So I wouldn't be surprised once we start digging into these numbers, that 15%, climbs up maybe 15 and a half, 16%. And then looking towards 2029, we continue to see heavy demand for used devices. Also, within some markets such as Western Europe, where there's green laws around certain amount of inventory needs to consist of used devices, that's also helping grow the market at a much faster pace than we previously forecasted as well.
Got it. And then this next slide shows new versus used growth for both historical and projected. You do have the market leveling out over the next few years, despite the last couple years showing a pretty inconsistent pattern. Can you talk to that a little bit?
Sure. So this forecast data, at least for the new, is from our Q1 forecast. Our Q2 forecast literally just came out this morning for clients. So I can't speak too much on it. I can tell you we did see a little bit of a lift in 2025 due to Q1 and Q2 performance, particularly due to some sell in the US to get ahead of tariffs. So that helped grow 2025 in general. But I think the pattern still exists here. We are, like I said on the first slide, we continue to see growth. So the market is not going to contract for new or for used. However, due to some of these ASP increases we're seeing, we will see used grow at a much faster pace. And I think for new, we're going to see some pockets of growth within some emerging markets. Think of markets like India, Nigeria, which have fastly growing populations, as well as some markets within Central and Eastern Europe. And then on the used side, we're seeing more demand come out of like Middle East and Africa for lower end models, which is kind of driving some of that volume in the outer years of our forecast.
Okay, thank you. And I know you mentioned ASP trends in use. So Sean, I've got some aggregated depreciation data that I'd like you to talk to. This is from across the Bstock platform. We have both iPhone and Samsung devices. Again, it's aggregated from across our platform. But can you talk a little bit about the trends that we're seeing here?
Yeah, I think what we're seeing is, outside of November of last year, you're seeing much more normalized depreciation in some months, an upward trend. This is kind of standard with pre-COVID. Really being about the life cycle of devices, not necessarily about macro conditions. I think what's really important to note, even with the noise of tariffs and all the talk, the prices have remained pretty darn consistent. The really nice part about the secondary market is that it's dynamic, and when there are fluctuations or macro trends or new price points or new features, the market adapts. And this is kind of case in point to that. It's been a very stable market, even though news and headlines are far from it.
Got it. All right. And this next slide shows Samsung depreciation data and trends. I just want to call out the Galaxy S23 doesn't seem to have depreciated like others. Can you talk to that a little bit, or why is that?
Yeah, I mean, what we're seeing is, there's a robustness to the secondary market. There's always been a B2B component to that. But the domestic consumer is becoming more savvy. Like I said earlier, the work being done to devices is far more sophisticated. And then you have OEMs really embracing refurb or renewed or buff and polish inventory. So it's really lifting all boats. So you're taking the grade of product, the quality of product in the secondary market upward. So it's holding value longer.
Got it. And I know this is from Q2. Can you give us any insight into what's happening in Q3?
Yeah, even more pronounced in Q3. The trend is certainly holding. I think that right now, like Anthony was saying before, the demand is far outpacing supply. The demand is insatiable, so it's really keeping that line above historical trend. Value and residual value percentages are higher, both from increased quality and just outpaced demand.
Got it. And on this next slide, we've got a snapshot of bestsellers by units sold and pricing. This is Q2 data. Anything unique or interesting you want to call out here?
Yeah, I think what's interesting is the diversity. Supply really drives demand. This is a good indicator of what's been hitting, what's popular in the forward markets is also popular in the secondary markets. When like Anthony was saying, when ASPs or MSRPs are much higher, the consumer finds a way to find a deal. If we can't afford it, we're going to find a way to get what we want in in the way we can't afford it. So this is representative of that. But also, you look at there's longevity to the iPhone 13. A lot of overseas demand for that product. These phones continue to have demand regardless of age and price point. I think that's the really interesting thing. Like it's holding value. You've got very high price per units on the recent stuff, the flagship products. But when you're thinking about units out there, the usual suspects are there. It's a couple generations back, and the volume is just it's massive, but the demand is insatiable.
Got it. And I think it also might be worth talking quickly about B2C versus B2B pricing comparisons. Seems like the gap is narrowing a little bit. I think at one point on our platform, B2B pricing for the iPhone 16 was fetching over retail, if
Yeah.
I'm correct. So any thoughts you'd like to call out on like the B2C versus B2B pricing?
Yeah, it's certainly tightening. The band is closer than it's ever been. Again, that's really due to the amount of quality product that's coming out. But it's also an indicator of the overseas demand, because there is still a very, very strong export market for this inventory. The value of domestic B2C, the B2B market, which is very much international, can rival that. And you're right, like early on, due to distribution or currency differences or many different things, the the presence of a SIM card slot,
Mhm.
there are reasons why grabbing the latest generation of devices will sometimes yield greater than MSRP values in the secondary market. It's wild, but it
Yeah.
definitely happens.
Yeah, super interesting. Thank you. And we had a question come in that based on this topic, so I'd like to go ahead and pose it to you guys. So I think Anthony, this is probably for you. For the 2025 forecast, what's driving the significant slowdown for used device sales versus 2024?
Yes. Good question. So I think for 2025, obviously this number will be updated in the coming weeks, but the greater influx of new inventory typically offsets what's going out for used, because some of this sell-in and some of this growth we've seen. We've also seen within emerging markets some growth at the low end, which is probably competing with used devices as a whole on the same price point, new versus used. Uh, I would have to look into specific, markets and regions to find out where the decline is specifically coming from. But typically, what we see is when the new market has some of that growth within emerging markets, some of the demand within emerging markets for use will actually start to fall a little bit. So that could be offsetting the 2025 growth.
All right, thank you for that. All right, let's switch gears and talk about tariffs, which has been a total roller coaster. I think as of today, we're in a tariff truce with China for any like heightened tariffs, but existing and potential policies are still impacting the industry and reshaping the landscape of both the primary and secondary. I know you've each done quite a bit of research on the challenges and even opportunities expected. Anthony, this is your slide, so I'll have you go through
Sure.
it.
So, obviously it's been, because we're in the business of forecasting, it's been a nightmare to forecast, particularly for the U.S. market on around pricing. What's going to happen. It seems like a new country is either added or dropped every day. But in general, overall, what we see is we do see an increase in ASPs, potentially driven by tariffs. We do expect price increases within our 2025, our recent forecast that's going to come out today. We are seeing vendors kind of step away from China. Not to say that the tariffs drove that. We did start seeing it around COVID as well. But for example, I think over the last 4 quarters, we've seen about 50 to 60% of Apple's inventory headed to the US, uh, coming from India. So around, on average, probably around 60%. I think in Q2 was closer to 90, 92%. So they are kind of shifting away to get ahead of tariffs, despite the fact that smartphones, PCs, tablets are on kind of this exemption list. However, no one knows how long that will last, or it could end the next day. It could be increased twofold tomorrow. So we don't know. But we are seeing vendors kind of diversify. In terms of supply chain complications as well, uh, the import cost continues to grow. So we are seeing uh, you know either manufacturers stocking up on component, loading up their inventory on components like boards, chips, camera modules, NAND, memory, things like that. We've seen a lot of, in the channel growth. And then consumer behavior, I'll talk to what we saw, particularly on the carrier side. We did see significant uptick in sell into the channel from some of the vendors to get ahead of tariffs. So, for example, Apple had the strongest Q1, I believe Q2 for the US market, because some of the vast selling they did for coming from India to get ahead of some of these potential tariffs in Q1. And so I think growth in Q1 for Apple in the US was about 20%, and then for Q2 was about 15%. Even Samsung seemed to load up. I think their growth in Q2 was around 14.5% for the US market. And then lastly, around environmental impact, we are seeing more green initiatives, particularly around, if you look at Western Europe, like I spoke about a certain percentage of devices coming from used or the secondary market, but also things around, USB-C support around every device, which is making kind of make it tougher for vendors bringing in secondary market. There has to be some workarounds, either going through England or France to try to get around these things. But the environmental impact is still definitely a driver. And then on the tariff side, the tariffs will also have an impact, even moving waste from other places, as everything will kind of get hit with this universal tariff. But we'll see. Tomorrow's a new day. It could change. But right now, like I said, the Q2 forecast is out, and we've only accounted for no incremental tariffs. Just, I believe it's the 20 or 30% on China at the moment.
Got it. Yeah, it'll be interesting to see how it plays out. Sean, I'm going to have you add on to this, in particular, what you're seeing from a secondary market perspective.
On the
we've
forward,
got some.
On the forward market, don't you think that we'll hold off tariffs as long as the Trump phone is still produced in China?
Oh, of course, as long as Apple still makes those shiny metals for them.
So funny. I think our perspective is far more, how is the domestic market reacting on the secondary side? We've certainly seen quick reaction, I think is the best way to describe it. That's again one of my favorite things about the secondary market is how dynamic it is. But we know that the potential impacts definitely hit part cost, repair cost. A lot of that is sourced from overseas today. We're certainly seeing higher demand for lower grade inventory just to have some part harvesting capabilities. We could definitely see supply chain disruption when we're talking about where inventory is repaired. And it may mean that the cycle of phones is disrupted as well. It looks like we're on pace this year for all the new releases, and timing of the iPhone. I think we've seen that we're going to have an announcement very, very soon. So I don't think that's disrupted right now, but the potential is certainly there. And we know that if the MSRP increases of a new device, the secondary market reacts in kind. It looks like if rumors are true, that the iPhone is only going to be about a $50 increase on the top end models. So, and some of that is I'm sorry. I think the message is that all of that is based upon the technology and components in it, not tariffs. So we're not going to see anything substantial. But even a $50 increase means that we will see an in-kind increase in the secondary market. And it typically doesn't just lift that generation, it will lift a couple of generations behind as well. So it will certainly have an effect, but it's great that it's not as pronounced as it could have been. So yeah, kudos to Apple if this does hold true. And we're certainly seeing shifts in where is inventory shipping? Where is the stuff going? And Melissa, I think we have it on the next slide.
Yes.
That's right.
Yeah, I want to call out that uptick in March when the tariffs were first announced. So happy to talk to this. Yeah.
So this is some data from our platform for some inventory coming out of Canada, and traditionally that inventory would come into the United States and be worked and dispositioned from there. But as soon as rumors and headlines started talking about it, the market shifted quickly. It went from a mix of half of inventory moving to the U.S. to a very pronounced almost 40% going to Hong Kong, and a sharp increase in UAE as well. Two major overseas free trade zones that move a lot of phones. So the I know that I've already mentioned it plenty, but the market is dynamic. That's kind of the great thing about the secondary market, is where there's a will, there's a way, and a dollar drives the day.
And we'll talk about what the iPhone 17 drop means in a minute. But on the topic of tariffs, we've covered kind of the impacts of what's happening, but can you talk a little bit about what companies should be doing or thinking about in response to the tariffs? We have some best practices up here.
Yeah, we've certainly, we get asked every day, if not every week, from customers on both sides of our platform. Hey, what should we be doing? What should we be thinking about? And largely, I think both sides are doing a great job. They're certainly thinking about diversity. How do we make sure that our supply chain is diversified, both from a resale perspective, part supply, and suppliers. And then they're also making sure, hey, are our suppliers and service providers diversified as well? So there's really this look into the business to make sure that it can support a dynamic environment. I think also, that there's going to be, if there's any pinch on new supply, that just means pre-owned's going to grow even more. So there's certainly a focus on how do we get more phones back. I've heard this from carriers and OEMs alike. What do we need to do to expand trade-in? What do we need to do to make sure we're getting more phones back? And I think you're seeing some of that in very aggressive trade-in promotions, which I know we'll talk about. But also, I'll call it what they don't want to say, leasing programs as well. Some of these, it's all branded differently, but the industry is making sure devices come back on a accelerated basis, whether it's a 12-month program, 24-month program. There's things in place to ensure that just in case we have a steady supply of phones coming back that we can utilize either for replacements or parts or repair, or we can resell into the secondary market.
Got it. Thank you. Anthony, do you have anything else to add here on this topic before we move on to trade-in programs and upgrade cycles?
Sure. Well, I think on the new side, and to Sean's point about dynamic, new always it takes time. Like if you have plans to move something, you're looking at 18 months to set up a supply chain, or maybe even more. It's not like the used market where you can pivot on a dime and move inventory to different places. For new, things need to be set up. So that's definitely one advantage on the secondary market. But on the new side, we're definitely seeing, like I spoke about, things moving away from China more and more as India starts to grow. We've seen not only Apple, but Samsung bring some of their not so much phones, but some of their wearables over there, as well as Pixel, and then Motorola starting to starting to do some more work within India as well.
Interesting. Thank you. All right, let's talk about trade-in programs and upgrade cycles. So historically, these have been primary drivers of growth for the pre-owned market, but things are changing a little bit. As you see on the screen, there's tons of promotions going on. In some cases, you don't even need a phone to get a new phone. So, Sean, can you talk a little bit about how this is impacting the secondary market?
Yeah, it's quite a bit. Um, the I think the baseline here is carriers are hyper competitive. If they were humans, they would be type A personalities, and it's just become this like arms race of promotions, and it turned into a race to the bottom. It's like a buy button on Amazon. It has just become like, we'll take anything, dear God, take a new phone from us. So the promotions have this year were just incredibly aggressive. Bring us anything, or hey, we don't even need a trade. We'll get you into a new device. To the question earlier about what may have impacted that kind of stagnation of new versus used, I think promotions like this are telling. When they're starting to talk about no trade-in needed, there was very much a focus on we got to get all these new phones coming in and into the ecosystem. Um, Certainly what we saw was a shift in how units came back in 2025 because of the promotions. It's wild, but less inventory went to insurance. Carrier stores, the employees are spiffed on contracts. So when somebody walks in with a broken phone, is like, I got to make an insurance claim. Well, what was happening was, well, you don't have to. Just trade it in. Instead of getting your phone replaced, we can get you into a new phone. We'll get you into iPhone 16. So there was this dynamic shift between the inbound channels of inventory. And you even saw people bringing in just anything to take these promotions and resell the device. So I think carriers learned from this that it may, while it did pump a bunch of new phones into the market, it did create some problems on the pre-owned side. It created some problems in stores, but it was this monumental shift away from insurance claims, and just bolstered trade-in through the roof. Very, very bizarre year.
Yeah, very interesting for sure. I want to talk about the iPhone 17 in a second, but Anthony, do you have anything to add to what's going on here with trade-ins and
So,
promotions?
yeah, well, in terms of training, it's not something, we at IDC, we look at what's being sold out on the side, not really on the buy side. But we do have conversations with the big carriers frequently on a quarterly basis. Yeah, we did see, to Sean's point, we did see some of these promotions kind of that were very strong, perhaps biting into the bottom line at some point as well. It's not sustainable. Do we think they'll continue? Yes, I think with all this inventory that's been pumped into the channel to get ahead of tariffs, they're going to have to sell through it, particularly
Yep.
when you have key flagships that are going to launch in Q3, like the new Folds, the new Pixel that just got announced, iPhone 17. That old inventory is going to be discounted, not necessarily at an MSRP level, but kind of through trade-in and promotions or BOGOs or family plans. So I think we do continue to see this, and hopefully it's more of with trade-in, not no trade-in needed. I think that kind of benefits on both sides. But yeah, I think promotion is still definitely a key driver, particularly trade-in at growing the premium end of the markets, not only in the USA, but we're also seeing it in other markets like Western Europe, and starting to see it in like Asia Pacific as well. So yeah, it's definitely a trend that will continue to grow.
Thank you. Okay, so we've mentioned the iPhone 17 many times in the past few minutes. Set to debut next month, and I know, Sean, you mentioned it looks to carry a higher price tag, at least for the Pro models, maybe around $50. You both have some data to share surrounding how the market has historically responded to a new iPhone launch. So, Sean, I will have you speak to this slide. This is what we polled prior and post for iPhone 16, so last year.
Yeah, I mean, this is certainly we see the effect of trade-in promotions, hitting the secondary market here. Um, the volume has been um, it's been a bit soft, but the ASP is super strong. So that going back to earlier, the demand is through the roof. So as these phones come out, they're certainly more robust. They hold really good value. So we anticipate the same this year. It looks like 2025 is most likely going to hold trend where devices will be, holding my breath. I hope that the new sales are stronger than 16. I think it's in that correct like upgrade cycle of this is the good one. And then the values also will be much higher. We'll see that impact of the $50 bump too. So you'll see the trend hold the same. The ASPs remain really strong in volume. Hopefully has a nice pop this year.
Okay, great. Yeah, and I was going to ask about the higher price tag impacting things, so thank you for answering that. Okay, so this is B-stock centric data. Anthony, you have some market-wide IDC data on the same topic that I'm pulling up here. Can you talk to this a little bit? Do we feel like the new iPhone 17 launch is going to drive more upgrades? What's going on?
In terms of driving upgrades, we believe this is a heavy upgrade year. If you're looking at some of the historical data, it's typically been outside of the 2019 pandemic, which is kind of an anomaly. We think it's been around every 7 years or so that we've seen kind of big spikes in the data. However, typically when we see a new, not so much a form factor, but shift in body style. So it's from what we've seen and some of the leaks out there, you can see that the back will look somewhat different from previous models, as well as the addition of the iPhone Air. So in terms of 2025 growth, we think it's going to be either on par with the 16 or slightly above. 2025 is hard to measure because we had so much strong selling in Q1 and Q2, and then you're only really seeing a full quarter Q4 of the new model. So 2026 will really be the key indicator on how well the 17 will do. And then obviously you have talks of foldable coming in the back half of 2026, which could drive some significant growth. But if I had to give like a bottom line response, I think it will be stronger than what we saw with 16, perhaps a growth of about 2 to 3% from a model to model comparison.
Great. No, that seems very positive. And we are going to talk about foldables in a minute. I know you have some data on sentiments for that. The next slide, though, that you've got here covers some additional Apple performance data and trends. So I'll let you speak to this and then we'll move on.
Sure, no problem. So this is just looking at kind of I think the big picture here is kind of the ASP jump we've seen, kind of the premiumization across Apple, kind of going when the iPhone X first launched, or the 10, kind of that shift to where premium flagships were, $699 or $599, kind of the jump to the $1,000 price point. So now you're seeing, more than 70% of the volume that was in Q1. But if you look at 2023 and 2024, approaching 80%. And I think if we're looking at 2025 full data, because the ASP increase that we will see with iPhone 17, I believe that 800 plus should land around closer to 80%. Looking at some of the region share, iPhone's had some problems in China recently, just to the resurgence of Huawei. If Huawei never had those sanctions against them, I think Huawei would be in a much better spot. But it's in a market where Samsung typically doesn't have strong market share. So Apple does have to play against, Huawei, Oppo, Vivo, which do have strong devices at much lower price points. So it's a tricky market there. But in terms of North America, the US market, which I cover, we are seeing a continued growth in demand for Apple devices. I think back in 2020, we were looking at about 45% of the US market being iOS. and now we're closer to 53% in 2025, where we'll finish around 53% in 2025. So they continue to grow. The one thing is, Apple obviously doesn't have a vast portfolio like some of these other players where they have lower price options across their portfolio. They typically rely on N-1, N-2, or iPhone 13, iPhone 12, but also used devices. That's where they come in to kind of satisfy that need for below 400. I don't think you'll ever see, a $300, $200 iPhone. They'll just rely on some of these used devices within these emerging markets to make the iOS ecosystem affordable to potential buyers. And then perhaps when those buyers do get the means for more income, they're already kind of stuck inside iOS, and they become kind of an Apple customer for life. And I think that's the game plan there.
Yeah, thank you. That'll be interesting to see how that plays out. And I do want to shift into the topic of foldables, which Apple hasn't technically ventured into yet being the key word. We'll discuss that in a minute. But Anthony, you've got some research data on foldables, including market share and consumer sentiment for foldable phones. I'll let you talk through this.
Sure. So, like I previously said about the Chinese market, where you have players like Huawei, Xiaomi, and Oppo, they make some of the leading foldable devices. Not prevalent in the US, obviously they don't play here, but within China, you could see what kind of impact that has on the worldwide mix, with over 65% coming from China, and market leaders like Huawei, Lenovo, and Honor, Oppo, pretty much outside of Samsung, all Chinese-based brands. USA continues to be strong, mostly led by Samsung and Motorola. Pixel just released their third edition of the Fold. We'll see how that does. But outside of that, I think in terms of overall foldable growth, our forecast has been pulled down, I think, 3 consecutive quarters for foldables. I think a lot of consumers are still on the fence around, build quality, durability. However, we're starting to see things shift in 2025. Within the first 2 quarters, we've seen some strong growth, particularly from Motorola in the US market with the Razr 2025. And from what we're hearing from some of our component feedback, we've already seen some strong demand for the Galaxy 7 Fold. Looking at it from a manufacturer point of view, for 2024, it was still heavily led by Samsung. Also, Chinese players, Huawei, did extremely well within mainland China. And then Motorola, which kind of drives on more affordable fold device, or flip device, excuse me, with the Razr lineup. But I think a key catalyst for this product category will definitely be, if Apple enters, or when Apple enters this market, to kind of drive more consumer awareness and kind of do what Apple does, is kind of set the bar on industry standards for a foldable phone.
Yeah, thank you. And are you anticipating this chart will look a little different at the end of this year, or as we go into 2026?
I think for the end of 2025, I can't really tell you on a per model basis, but on a vendor basis, I think Samsung will still be the market leader, and then it'll be a close toss up between Huawei and Motorola for a second spot.
All right, thank you. And I know you've got some other data here on demand for foldables. This is US based and obviously doesn't include Apple, but it looks like sentiment is down for foldables.
Correct.
Yeah, can you talk to
So
that a little bit?
this is some of the reason why we dropped some of our foldable forecasts. You can see the interest went down about 12 points from last year. We've seen kind of the early adopters, get what they wanted to get, and then, those upgrade cycles are probably a little bit longer on a foldable because the high price point, and even potential buyers dropped by 10 points from 2023 to 2024. 2025 data just came out. We just got back from the field 2 days ago. We haven't looked at it yet, but when we do this again, it'll be interesting to compare how 2024 and 2025 align, considering some of the new launches that we've already seen in 2025.
Yeah, definitely. It'll be good to see that. Sean, I want to bring you into the mix here to talk about what kind of demand for foldables that we're seeing across the eStock platform. I know we had one foldable model on our list of top models that we had up earlier in the presentation. Can you speak to that a little bit?
Yeah, I mean, certainly driven by Samsung, and that demand has continued to grow as more and more of the large scale refurbishers and processors in the secondary market have kind of figured out what do I need to repair this? What do I need to process this? Where do I find parts and things like that? So certainly the demand is there. The nice part is, maybe not for the consumer, but the price point is very, very, very high, which means that the secondary market demand is also very, very high. It doesn't quite hold the recovery percentage or the residual value percentage of other devices, but it continues to creep upward. And I think now we're kind of in that point in 2025 where the processors in the secondary market have got this figured out and they're able to move quickly, which is and put a very good product out there, which is maintaining higher residual values. So that just keeps that will float the boat all the way back to the OEM.
Thank you. All right, so foldable iPhone. Um, what we've heard is that it's set to be debuted in 2026, possibly along with the iPhone 18. Anthony, you've got some data here on consumer sentiment for a foldable iPhone. Can you talk to this a little bit? Actually, that Yes 100, how the uptick from 2023 to 2024 is super interesting. So what drove that?
Yeah, so it's very interesting if to the last slide where you compare just general foldables buyers versus adopters versus non-adopters. Here, when we looked at 2023, maybe depending on features, 41%, maybe depending on features, 35%. But the big one, to your point, Melissa, is yes, 100%, 13.5%, all the way to 32%. So it's showing that there is kind of demand for foldables, but perhaps of the iOS variety. And then even foldables are not for me, coming down 10 points. And then even not share dropping down. So I think, the demand is out there. What Apple delivers will be crucial. We're thinking more towards fold than flip, perhaps, but still too early to say. But I think it could be a significant driver of overall foldable volume for the primary market. And then on the secondary market side, it's there is to Sean's point, there is complications around panels and hinges and repair, but overall it will most likely have a positive impact on at least on demand for foldables in the secondary market as well.
Okay, super. Yeah, that was going to be my follow-up question. And we did get a question in that's applicable to this. So, Anthony, you touched on it a little bit. It looks like the secondary market is going to struggle with folds and foldables due to repair and refurbish costs. What do you guys make of that?
Yeah, it's the hinge. Like the hinge are very proprietary. A lot of engineering went into it. With the Pixel 10 that we just saw yesterday, the hinge has been completely reworked. So I think devices that are coming in and I would say in 90% plus condition have probably a good future. But as a consumer personally, I don't know. It seems like a little bit of a risk to go for a foldable in the secondary market, unless like you said, you have CPO or you have a trusted source that you're acquiring from.
Thank you. Yeah, Sean, anything to add to that?
Oh, I think Anthony hit it on the head. He spoke to it like a consumer. Like, I don't know about that. Like, it's already, known as new technology, and it's wow that it's a screen that folds. That's crazy. Do I really trust somebody to repair that? I think that's human nature coming into it.
Yeah.
And so what I would say is, yes, we're seeing that is priced in the secondary market. The residual value is a percentage, is not as high as others. However, it's creeping upward as those that are doing the repairs and taking them in the secondary market, as they're able to sell them for more and get less returns. That means they're making more money, and then they can spend more sourcing that inventory. So we know that there's trust when that value is going upward, and we're already seeing that. Now, of course, with the introduction of a new OEM in the mix, and if Apple does do this, it will pop. Like whether we like it or not, it will pop, and there will be that demand out there. but it's going to take time to build the supply chain around it. So we'll probably see the same trend of softness in residual value, but increase over time. I think the nice part about Apple too is like there will be secondary market demand for even if it's not the best repair in the world. Man, if I can get it for 60% of retail, somebody's going to take that bet. So it'll be a little bit different, but I think it'll hold trend to Samsung.
Great. Thank you. Um, all right, moving into our final topic, which let's be honest would be hard not to talk about because it's everywhere, AI. In particular, I want to cover how AI is going to impact the smartphone industry moving forward, both in terms of technology, and how it's being used for processing, repair, and resale. So Anthony, you've got some data on the screen. This is consumer sentiment for Gen AI and smartphones.
Correct.
Looking at it, most people don't really understand the advantages of AI. So what does this mean?
Yeah. So if you're looking at consumers only, there's still almost half of consumers out there don't fully understand the benefits of AI or why they need it. However, it's not indicative of will they buy it. The fact that the U.S. market is very premium, uh, I think it's nearly 60% of devices are over $800. Uh, they'll have it on their phone, whether they like it or not, just because they're buying at the high end. Teaching them how to use it or what it does, that's a different story. Typically by the vendor or the OEM. Uh, but what they want to use it for. Right now, we've seen big use cases around AI powered assistance. You can see on our chart is 23%, task automation, and well as like a personal kind of experience where things are going into your calendar automatically, things are looking. We know Google yesterday had some pretty, this survey was obviously done well before that around using some of the camera stuff with your voice, like delete this bag for me, add in a sun. So it looks better than even from what I saw last year. However, we still don't think it'll be significant driver of volume. I would put it almost on par with what we saw when we shifted from 4G to 5G. Did consumers need 5G? No. Did the next phone they buy have it? Yes, whether they wanted it or not. So I think just down the line as we get closer to our last year of our forecast, which is 2029, we see more phones will have it just because it becomes kind of a standard feature. Using it and how they implement it and how they market it, that'll be a completely different story.
Got it. Thank you. And it's not the primary driver of upgrades either, right? AI people are not trading in for better AI features. It's other things that are prompting that, correct?
Sure, exactly. So I think still a primary driver is still obviously new shiny hardware becomes a big driver, and then refresh cycles depending on what your refresh cycle you're on. But the US has a pretty big install base. I think almost 98% are already on smartphones. So deals is what the key driver is. And what Sean said about trade-in and promotions, that remains the key driver. The phone in your hand, yes, it's good enough, but if I can get $600 for it and the new device, the shiny new device, is only going to cost me $5 to $10 more per month, why not? Or perhaps doesn't cost me anything. I'll get the new one as well, and that's good for the secondary market. It keeps a steady influx of phones coming back, and it kind of scales supply and demand. You know, there is definitely a shortage of high end devices on the resale side. So I think these carrier plans kind of benefit both sides of the party.
Thank you. And Sean, you're nodding your head a lot. So anything to add here?
I was more curious as in that example of the photo AI to add a sun. Did it add a star or just a made up child to the?
It's a
No,
good.
you're totally right. Like AI is not driving the upgrade cycle. Is it a nice feature? Yes. Are my parents still afraid of it? Yes. So I think, as people understand, what the AI things can do, what the productivity around it is, it'll become more of a feature and a need than it is today.
Okay, got it. All right, so even if it's not technically driving upgrades, AI and automation are still being used in processing, repair, on the B-Stock platform for predictive analytics. Sean, can you talk a little bit about what's going on with AI and automation when it comes to trade-in processing in the resale market?
Yeah, absolutely. I mean, being used more than ever. We're certainly seeing the effect of AI influencing robotics. The processing is smarter than it's ever been. AI is influencing what do I do with this phone? Where should it go? And now, AI is starting to predict secondary market values. I think that's where we play the most. We've built a tool over the last year and a half to take the B stock data set, which is massive B2B secondary market ASP information. And because of all the work the CTIA has done to standardize grading scales, we're really able to align inventory better than we ever have, because people are speaking the same language in the secondary market about what a condition of a device is, both functionally and cosmetically. So because of this, the data set that we have, we can use and put into machine learning models to really accurately predict what is going to be the value of this phone in 12 weeks, 24 weeks, 16 weeks, 8 weeks, whatever that is. The models are smart. You don't need as much data to feed them, and they're constantly learning and actually training each other. So it's really neat to see what's happening with all of these models, both to make the outcome of processing better and then the prediction of pricing better. That means carriers can set better trade-in values. They can have more competitive promotions. Insurance companies can have a stronger, less of a deductible price or a less monthly fee for insurance because they know, what they're going to have in their hands if they get a broken phone back. There's all these use cases for understanding future secondary market values. And it's going to lead to a better consumer experience, which is really cool.
Yeah, very cool. Thank you. And I've seen also some of the videos of in our processing facilities where AI and automation is being used in repair, and it's fascinating. And I'm sure it's only the tip of the iceberg. So
Yep.
very good. Okay, so I am going to wrap things up with that and move into the Q&A portion. Thank you both for that, for all your insights there. That was a great conversation. So we had a few pre-submitted questions that I'm going to tackle first, and then if we have time, we'll get to the ones that were submitted during the presentation. So most of the questions we got were tariff related, no surprise. Some of them we did answer, but I'm gonna circle back to some so you can elaborate a little bit more. Tariffs might give the US pre-owned market a lift, but they could put a drag on global demand for pre-owned. Is that the case?
Hmm. I yes, it will increase the demand in the US. Like, if the new supply of devices comes down in any way, then the demand domestically for pre-owned will go up. Um, Certainly the US market is a supplier of pre-owned devices to the world. So arguably, yes, if the US market is eating more of that inventory, then the global secondary market may suffer. My only counter to that would be that I think the secondary markets abroad are becoming more sophisticated, and will likely, the mix of what they get new may shift, and inventory will stay. So I think those carriers and those OEMs will kind of shift their business a bit to try and get more inventory back, become less reliant on sourcing from the primary markets, and become more insular with their supply chain.
Got it. Thank you. Anthony, anything to add there?
No, totally agree with Sean. We've already seen, you know, Western Europe kind of adopting some of these, trade-in and buyback programs similar to the US, as well as financing, which is kind of driving the overall growth and volume there. Uh, the US continues to be kind of the feeder of the market. But I think down the road we start to see other developed markets, particularly within Western Europe, starting to feed some other emerging markets. So the volume's not just coming from the U.S. market.
All right, thank you. Another tariff-related question. How have tariffs and the uncertainty they have created affected device refurbishing in particular?
I haven't seen like very hard effects yet. What I think the fear is that it will affect part supply more than anything else. Yeah, the refurbishment is reliant not just on harvesting, but outside supply of parts. I do believe that both Samsung and Apple and others have started to diversify their supply chain so that parts can make it in. So I haven't seen, personally, I have not seen a massive impact yet. It's more about preparation. Like, uh-oh, if this were to happen, what risk management do we have in place so that we're not shut down, or that our cost doesn't balloon so much that we can't run anymore? I think that's more of the impact that I've seen this year.
Got it. Thank you. Another question that came in, is the higher demand and pricing for used devices also driving up the margin potential per unit for circular economy vendors, so repair, buff and polish vendors, or is that space also seeing more competition that is limiting margin potential?
These are good.
Mhm.
Anthony, I've been talking too much. You want that one, or you want me to jump in?
Well, yeah. So we don't track necessarily on the repair side, just on being what's sold through. However, if the cost for these go up or if competition increases, I think at the end of the day, the anything like this will be probably passed on to the end consumer. So we'll probably elevate prices in the end market, and that's what we track. So we've been looking at ASPs for secondary devices. We have seen growth. Number one is most likely a better mix of premium. So it's very hard to tie it back to that point or to that question. We just don't know if it's a fact because of some of the increase in repair costs. But we are seeing, a lot of refurbs coming back, and this is some of the vendors we talk, not vendors, some of the component suppliers we talk about looking at used devices just for a component perspective. So dismantling broken or non-functioning, perhaps digging in there, pulling out NAND, pulling out RAM, pulling out anything they could salvage to kind of cut costs because of some of the higher prices that we've seen around components due to tariffs.
Thank you. Sean, anything to add there?
No, I mean, Anthony's got it. It's the push from whether it's an OEM or carrier or insurance company, doesn't matter. The push is increase residual value. So all of those actions, buff and polish, repair, et cetera, et cetera, et cetera, they're being taken out of necessity. So may it compress margin? Sure. Do we really have a choice? No.
All right.
Yep.
Thank you. And we are at the top of the hour, so we are going to wrap things up. Thank you both so much for your time and insights today. Thank you to our audience for dialing in. Be sure to scan those QR codes to access some content pieces from both BStock and IDC that you'll find helpful. They have tons of data, analysis, and insights. I've also got Sean's email up there, so feel free to reach out to him with any follow-up questions. And be on the lookout for a follow-up email from us with the recording and slide deck. And other than that, thank you again for joining us, and I hope everyone has a great rest of the week.
Thank you, everybody.
Yeah, bye-bye.